Ladies and gentlemen, hello and welcome to PANGEA Talks, authentic thought leadership conversations with some of the world's leading professionals in family wealth matters. Joining us today is Mr. Alex Gabrini of Fidelity Investments. Alex leads areas of Fidelity's family office and private counsel offering. Fidelity, as most of you know, is one of the largest investment management firms in the United States, with over 40 million individual investors, 11.8 trillion in assets under management, and approximately 4.5 trillion in total discretionary assets. You may know that Fidelity is a family firm, which is what we talk about here at PANGEA, and Abigail Johnson is the third generation of the family to run the Boston-based company. She took over from her father, Edward Johnson III, in 2014. Abigail's grandfather, Edward C. Johnson, founded Fidelity in 1946. A March 2022 report from Bloomberg found that the Johnson family, which owns nearly half of the company, is worth about $48 billion, and the other 51% of the company is owned by employees. Truly a remarkable multi-generational family business success story. Incidentally, this evening I've been invited to an event that honors another remarkable family, Canada's Desmarais family, a name I'm sure you're familiar with, Alex.
Absolutely.
Alex, in your career, what we've done in terms of preparing for this conversation, we wanted to make sure that we were very well equipped and prepared, because you've decided to share some of your precious time with us. Your career in the wealth management sector, you've thrived here for the past 20 years and more. We were curious in doing our research and preparation for this call. We were curious, how does a talented fellow like yourself with a Master's of Arts History degree from Uft end up in investments?
That's a great question, Declan. And sometimes I ask myself that question: How did I end up here? My goal in doing my master's in history was actually to become a history professor. I've always enjoyed teaching and educating folks and doing presentations and things like that, and research I enjoyed as well. Always had a very curious mind, and that was my initial career path. And I think I got 3/4 of the way through my master's thesis and just had a change of heart. It was a long time to be in school. I wasn't sure that I wanted to continue and do a PhD, and just wanted to kind of explore what other options were available to me out there. So I just hit the job market, and I landed at Invesco back in 2002. So actually my 20th anniversary is coming up in July in the industry. And I was always very curious about finances. I'd not received any financial education in our school system, as you know, and wanted to educate myself a little further on it. And this job opportunity came up just in the bilingual client relations department at Invesco, and I jumped at the opportunity to take the role, and I really haven't looked back ever since. I held sort of progressive roles at Invesco up until 2006, more on the management side. I was managing the problem resolution team in the back office when I decided to leave Invesco to join Fidelity in 2006 on the sales side as an inside wholesaler. And for the last 14 years or so, I was working with financial advisors in downtown Toronto, and assisting them on business building ideas, investment ideas, and so on. Fidelity's really been, my home away from home for the last decade and a half or more. And they've really given me sort of all the tools to thrive in this environment. And just really thrilled to be in this new role now, focused on the family office and ultra high net worth segment of the industry, which is a really interesting space right now, I think, in the Canadian investment industry.
Indeed, interesting is one word. Words I've used to describe this space: dynamic, insightful, transformational. There's, in my experience, 25 years in this space, in the Canadian high net worth wealth management space and ultra high net worth space. It's one of the most energizing environments for me to be in, because there's so much great insight that one receives from being at the right tables. Sometimes seeing things significantly ahead of the time before it makes its way through the other parts of the market. So that's one of the reasons I love being in this space. And I was curious, as I'm listening to you, you talked about research for your master's, and I want to connect a thought to that research word that you made. And in addition to that, you talked about your family office's role, where you're building relationships with family offices. I'm curious, Alex, what are the top 3 reasons that Fidelity really wants to partner with family offices, in your opinion?
Yeah, it's a great question, and to your fantastic introduction on the firm, we've I think one of the things that working at Fidelity has really been enjoyable to watch is how the firm embraces innovation and how the firm has evolved. Certainly over the last 16 years since I joined the firm, it looks and feels very different from what it was, back in 2006. And I think that sort of evolution is something that the founders pay really close attention to. You mentioned Edward Johnson III, Ned Johnson. Abigail's father. He actually passed away a couple of weeks ago at the age of 91. He took over the company in 1972. It was really a small mutual fund company at the time. And he's credited with really helping to change the way the middle class thought about its money in the U.S., transforming Americans from savers to investors, basically. He was really innovative. I would say he's largely responsible for the democratization of investing, bringing the middle class into the capital markets. And I think, turning Fidelity into one of the world's largest asset managers, as you mentioned. And Abby who's been running the company, for the last several years, has been continuing that innovation. For example, right now she's democratizing access to cryptocurrencies for investors, making them available in 401ks in the U.S. Our history in Canada is similar. We came to Canada in 1987. Actually, we opened our doors on Black Monday, the day of the infamous market crash in October of '87. And we've grown to one of the largest asset managers in Canada with around $210 billion in assets here. I would say through innovation, through a proven performance, through an enviable suite of investment vehicles, and through partnership with financial advisors. We have not had any of our own distribution in Canada. Our distribution has entirely been through MFDA and IROC licensed financial advisors, and that has really served us well. We've earned the trust of advisors over the last, since we came to Canada in the late 80s. However, to your point, when you look at the investment industry in Canada today, you'll notice that the 2 fastest moving or the 2 fastest growing segments in the industry are at sort of the 2 extremes. It's, on the one side, you have the do-it-yourself space, the robo-advisor channel, and then on the other side, you have the ultra-high net worth space, family offices and private wealth. And I would argue that the ultra-high net worth space in Canada is largely underserved. Intergenerational wealth is relatively new in Canada, as you know, and the family office industry is still in its infancy here compared to other parts of the world. But I think we're beginning to see, a catch-up happening in Canada. So this is really Fidelity continuing to evolve. Being a private company allows us to invest in new areas with a focus on the long term. We don't have to worry about hitting quarterly earnings expectations. I would say the second reason that we want to partner with family offices in Canada is that we think we have the experience to do it well. I think the ultra-high net worth space has been served by niche players, and Fidelity in the U.S. has been working with hundreds of family offices, both single family offices and multifamily offices, for over a decade and a half. We have a dedicated family office services group that offers fully integrated services for the family office community in the U.S. We're also able to leverage, a lot of that experience and bring value to the space in Canada, including through thought leadership on a wide range of issues for family office executives and family members. We can share insights into family office investment behaviors and best practices. CIOs often come up to us and inquire about the activity of their peers. So one of the things we do in the US is we survey hundreds of family offices every year on several key investment and operational areas, things like asset allocation, private equity, co-investments, cryptocurrencies, and we publish the key findings in a detailed study that we're able to share, including to family offices here in Canada. And then I would say the third reason, we believe we have an enviable range of investment offerings for family offices as well, and we're dedicated to continuing to develop that range of investment vehicles. We probably have the most complete lineup of solutions in the Canadian industry, including tax-efficient investment vehicles, a wide range of ETFs, alternatives, cryptocurrency, on the alternative side, market neutral, long, short, which are available in liquid alternative packages. So bringing the best features of hedge funds to the market without the concerns around liquidity and for a fraction of the cost as well. So we're really working on continuing to develop that lineup of investment solutions that we think, we've for many of these, we've earned the trust of advisors for decades here in Canada. And some of them now we're looking at launching that are more attractive to the ultra high net worth segment and more tailored or customized for the ultra high net worth segment.
Alex, I want to thank you for that detailed, thoughtful response. It sounds to me, from me listening not only to the content of your response, but the way in which you delivered it, I get a sense that you're actually really excited about the work that you're doing there at Fidelity. It sounds like you are really proud of the work that your team is putting together and coming to market. And we've had some conversations about where we can contribute and collaborate as PANGEA private family offices and Fidelity. And our relationship will continue to deepen. And part of the reason we found value in our initial conversations is because you are being innovative and because you actually have some insight in the space. In your previous contribution, you mentioned Fidelity's family office investment study, and I received that study, the 2021 family office investment study. I want to share a bit of what that report declared, what it found. And we can talk about it in the context of this conversation because you alluded to some of it. Your Fidelity 2021 Family Office Investment Study found that 1 in 5 family offices state that they're interested in adding cryptocurrency. But while cryptocurrency investments remains low at this time, interest in understanding digital assets better is at an all-time high. The study also found that 22% of family offices see inflation as one of the bigger investment risks in the next 3 to 5 years. And you and I, we're seeing it, witnessing it right now, and we understand what's happening with interest rates as they aggressively get hiked higher to get inflation under control. And this is actually in contrast to 2 years ago, when the biggest risk perceived was geopolitical. Another thing the study found was that 1 in 5 family offices expects to increase new investments, and I'll say this in the context of your alternative investment statement. 1 in 5 family offices expects to increase new investments in illiquid assets. Family offices expect to increase allocation to private equity while reducing exposure to certain public equities and reducing cash exposure. I wanted to ask and actually learn from you, Alex, based on 2022 year-to-date insights from your desk, related to the aforementioned findings in the 2021 Fidelity Family Office Study, I wonder if you could comment on any 1 or 2 of those things we talked about from new things or developments you've seen this year so far.
Yeah, that's a good question. And, I would say that what we are witnessing, right now with the increased volatility in the markets and the, rising rate environment that, we're at the forefront of or at the beginning of, to combat these high inflation levels that we're experiencing, that's really what's on investors' minds right now. And, so cryptocurrencies, although they are still an area of interest, I think those have kind of, interest in cryptocurrencies has kind of gone to the sidelines while we deal with the issues that face us, immediately here in the market. So what you see, and certainly with the correction you're seeing right now, in the cryptocurrency space, there isn't as much of an appetite to make new allocations to cryptocurrencies today, even though perhaps the correction that we're seeing in Bitcoin and Ethereum and other cryptocurrencies is actually going to present us with a great entry point to get into some of these digital assets. I think what you're seeing right now, in particular in the ultra high net worth segment, is just a gradual shifting of the portfolios, to combat inflation. So whether that's increasing commodity and real estate exposure, which typically provides some inflation protection, shortening the duration of the fixed income, allocation in the portfolio to protect against this rising rate environment, or using alternatives such as private credit, for instance, to insulate the portfolio from some of these shocks. I mean, I think we've seen one of the worst starts to the year for bonds, for bond performance, that we've seen. And so I think that's driving investors to, especially in the ultra high net worth space, where they have the means to invest in some of these less liquid options. It's leading them to move more into things like private credit, things like market neutral strategies, for instance, that may provide some capital preservation that typically you would see from bonds, but we're providing a little bit more protection from a rising rate environment where bonds are negatively impacted in that environment.
I really appreciate the sophistication in which you chose to respond to that question. Some of the strategies that are on the Fidelity platform, you talked about private credit and other alternative strategies, really speaks to the depth of thinking that's going on at your leadership level and even in your product development level. So thank you for sharing that. It gives us a bit of insight into how you're aligned to support family offices who are further up on the wealth sophistication structures as we look to protect and preserve our wealth for the long term. Alex, you raised some points as we were doing some research in preparation for this conversation. You raised some important questions for family offices on one of your recent LinkedIn posts. And this is going back a couple months, but we were able to find some of your thoughts, and we thought it would be interesting to get a perspective from you on some of these thoughts. You asked earlier, and you talked about in this conversation earlier, about innovation and how important innovation is to Fidelity. One of the questions you posted in that LinkedIn conversation was this, and I'd love to get your insight and learn from you on this. You asked, are family offices embracing innovation and investing in digital transformation and AI? And that was a powerful question to ask, and I'm curious to know what Fidelity is doing on the digital transformation and AI technology investments, even within the firm itself, that you are able to disclose. Understandably, you'd need to keep some things private, but whatever you can share with us, we'd love to learn from you.
Sure. I mean, I think that's a good question, and I think to varying degrees, you're seeing family offices start to embrace technology like artificial intelligence and automation, and certainly Fidelity, I would argue, is not just an investment firm. We're also a technology firm. We have something like 100 technological patents. We have the Fidelity Center for Applied Technology in the U.S., Fidelity Digital Labs as well in the U.S., where they incubate a lot of different technological endeavors, whether that's exploring meeting in the metaverse, for instance, which might be foreign to someone of my generation. Putting on a headset to meet with someone's avatar in the metaverse is not something that I think would come naturally to me, but possibly to my children who spend time in these virtual communities like Roblox and so on. Mm-hmm. It might be the way that the next generation wants to interact with folks. And so we definitely do a lot of research on these technologies. Fidelity actually has built, has a footprint in the metaverse, a digital stack where it's essentially an educational facility for folks that are exploring these decentralized virtual communities. Mm-hmm. So we're looking at different ways to interact with the younger generation, through technology. In terms of investment management, we've created, an ETF lineup that utilizes methodologies that at this point were created by humans, but we're certainly open to taking artificial intelligence information and feedback, for the future generations of these solutions. So I think you're going to see technology play a bigger role in asset management as well, down the road. I don't think we're there yet, but these are all really crucial topics. And I think if you're not contemplating how technology is going to impact the industry, then you're likely going to get left behind by it.
Yeah, you're on track with the things that you're articulating so concisely. A dear friend of mine, Ihsan Mirdamadi, is the CEO of a fractional CTO firm based in Toronto. They've got clients across North America. And his philosophy, which I've actually adopted because I've seen it now close up, his philosophy is that every company is a technology company. And when I started to think about it through the lens of what he was showing me, I started to realize that, my gosh, if you're not already there, and you've heard this term inflection point, if you're not there, it may be a difficult path to recovery if you miss this wave, because folks who are already at the leading edge will win massive market share, leading with technology in their firms. And I thank you for sharing it, because it's exciting stuff. I really love having these conversations about technology and learning how they're going to continue to transform the way we do business. You've heard terms like RETech, real estate technology, MarTech, marketing technology. And we have firms that are clients of ours, the principals who are clients of ours, who are already developing these technologies. So we're seeing it on the ground, and we're seeing the significant changes and impacts it's making real time. So it's something that we're going to keep talking about, you and I, when we connect again. Maybe for a future call, we'll talk about the developments that have happened at Fidelity with their technology, digital transformation, and AI platforms. I wanted to shift the conversation a bit, just to bring it to a level of relatability for folks thinking to themselves, Fidelity, we've heard about them, and maybe folks are thinking, what are the ways that Fidelity and the Fidelity offering to family offices, what ways are they unique when compared to other investment service providers? If you would love to, I'd love to welcome you to share maybe two ways that you believe the family office offering at Fidelity is unique when compared to the other investment service providers, Alex.
Sure, appreciate that question. I think what we're trying to achieve here in Canada is we're trying to get family offices to think of us as an extension of their team. That's really, I think, one of our key differentiating factors. If you need tools to educate the next generation on financial literacy and inherited wealth, we've got resources for you. You need advice on handling family dynamics. We've got useful thought leadership really on hundreds of family-related issues that we can share from working with family offices and family members for over a decade and a half in the U.S. And to your question on technology, I think this relates to technology as well. If you're a single family office executive or family member, one of the things that we can do that's really unique is connect you to the largest nonprofit self-governed community of single family offices in the world, which now has north of 1,000 members. It's a community that was essentially incubated in Fidelity Labs. So the way that it came about is there were regional single family office groups that were formed throughout the different parts of the United States. And they didn't really have any way to communicate with each other on a national level. And they didn't have the technology either, to have a forum where they could collaborate. And so they approached Fidelity and said, is this a problem that you would be willing to help us solve? And essentially, Fidelity took that project, incubated it in Fidelity Labs under the Fidelity Center for Applied Technology, and have created this, really amazing community where single family offices can gather to gain unbiased perspective, to exchange ideas, and to find answers to their question, all in this collaborative environment. And they're able to facilitate conferences and meetings and so on as well through that community. So that's just one of the ways that I think are going to be able to differentiate ourselves from the other service providers in Canada. Secondly, if you're partnering with niche players, they may do one thing very well. I think what we're able to do is provide things like dedicated access to investment research. So that can include macro research from our Director of Global Macro, asset allocation perspectives from our Global Asset Allocation team, sector research from our Director of Quantitative Market Strategy. We run a dedicated manager research webcast series specifically for family offices, research teams for due diligence purposes. We have various subject matter experts that we can rely on for tax and estate, digital assets, ETFs, alternatives, and portfolio construction. We can offer advanced portfolio analysis with a tool that we built called Fidelity Portfolio Intelligence, which was built in partnership with MSCI and MSCI Barra One, which is really the same tool that our portfolio managers use to analyze risk and factor exposure in their funds. So those are a few of the ways that we think we can differentiate ourselves rather than just offering great solutions. The additional level of support and service that we can offer, that sort of white glove bespoke service level, I think is going to be pretty compelling.
Evidently, there's meaningful steps being taken at your leadership table to really align yourself with the needs of family offices rather than just seeing them as a target for assets. You're looking to add value. And I think that's a distinction that will pay off long term for Fidelity, is my estimation. And I know some of the conversations that are happening around our family office table with our leadership and how we can continue to do more work with your team. It's really because of the additional value we see. Because as you can appreciate, yield and rates of return, most folks of some acumen can get access to it on a risk-adjusted basis and do a reasonable job at obtaining them on the market with sufficient frontier as we build portfolios for our clients. But what else? What else is there that can be offered of value? And I think what you've articulated goes a long way to speaking about how you're thinking about working with family offices. And I appreciate that there's something of significance beyond the solutions, which are solid solutions as well.
Yes, I would say, sorry to interrupt there.
No, go ahead.
But I would say, really what we're trying to do is to lead with the value.
Indeed.
I think if we can lead, and this is the approach that our team in the U.S. has taken, is lead with the value. Opportunities will present themselves down the road for, to partner on the solution side. But what we're really trying to do is be at the forefront here or take a leadership position in the industry in terms of the value that we can add and provide to family offices throughout Canada.
Certainly, and that's coming through loud and clear in our conversation, and I appreciate you taking the time to articulate it the way you have. I wanted to shift our thinking in further along the path of the conversation we've already started, and I wanted to quote some information from page 6 of the Fidelity 2021 Family Office Investment Study. On page 6, it says, the majority of family offices that Fidelity has interviewed for the study look to their peers for generating investment ideas. At Fidelity, the report says, we have seen family offices enter into strategic partnerships with other firms, either other family offices or private equity firms, leveraging their expertise in direct investing. How does that finding sit with you in the context of what you're building at the Fidelity offices here in Canada, and how you can continue to form or build bridges with family offices here in Canada?
Yeah, we actually have an individual in the U.S. who's our VP of Insights and Connections, and his role is to create some of this great content that we have, including our Evolving the Family Office ebook, which you quoted earlier. He just wrote a new piece on relevancy in the family office. he's worked very closely with family offices for a long time now. And the other part of his role, on top of curating content, is to bring, is to forge connections in the family office space. So to act as almost like a center of influence, almost like a referral source on a wide range of, family-related topics, basically across the space. So, you're looking for someone to help with your philanthropic efforts. He's been able to build a network of professionals in that space that he can refer folks to. In fact, he came from the philanthropy side prior to his current role. You're looking for assistance on the health and wellness side, someone to refer folks to for addiction and mental health, whether it's collecting in aviation, whether it's human capital, succession, whether it's, the rising generation, financial literacy and education. It's really about forging, connections or making connections between folks in the industry that can be mutually beneficial. And I think that's one of the things that the Forge community, this community of single-family offices, seeks to do in the U.S. as well. I think bringing family offices together, is certainly one of our objectives in Canada as well. I hope to run events where we bring family offices together into the same room, where we're not in there to pitch a product. We're simply there to bring folks together and hopefully get some useful synergies out of the group. And I'm participating in events in the industry that are organized by others where that's the primary objective as well. I think that whole concept of connecting folks in the ultra high net worth space is very important.
It's actually how we do business. We would sooner do, you've heard this term, club deals, where we partner with other firms whose principals we know and we've known for decades, and it just creates a different level of experience because we have in-house expertise from people we know and trust and who have a vested interest in having families and communities that we are supporting be successful. So I definitely want to continue this conversation, perhaps on a different call where we look to explore that a bit further and deeper. Alex, you've been so gracious with your time and what you're sharing right now. I wanted to explore a bit further an on-the-ground example, boots on the ground, so to speak, and invite you to describe, if you will, a positive family office experience. You don't have to share names for confidentiality, of course, but looking for you to describe a positive family office experience when using Fidelity's services. Specifically, what we're looking for here from you is, what did you notice that was important to the family office that you worked with, and how did Fidelity exceed expectations?
Sure. Appreciate that. I think one example would be last month I met with a single family office executive who was recently hired by the family to assume responsibility of the office, including their investment strategy and approach. This is an ultra wealthy family, but outside of generating wealth from the primary business, they haven't really taken advantage of investment opportunities in the public or private markets. This investment professional, this family office executive, describes that their public equity investments were actually still in the form of paper stock certificates sitting in the vault.
Oh my goodness.
And that the one thing they asked him to do when he started was to build a laddered bond portfolio for them. I was able to provide him with a wide range of articles and tools to help him educate the family. I was able to work with him to construct and analyze portfolio models that would make sense for the family. I'm sure you hear the expression all the time. When the family is rich, they're looking to stay rich. And so capital preservation was certainly at the forefront of what this individual was looking for. So, and also tax efficiency was also supremely important. So we're primarily focused on building and analyzing portfolio models around tax efficiency and capital preservation, two key components for this wealthy family. Mm-hmm. But they were also looking, for investment opportunities in other businesses that were sort of founder led the way theirs was. And what you tend to see is with these founders, they have sort of that founder's mentality, and they often get involved in venture capital, early stage venture capital, and try to invest in other founder-led businesses. So this got me thinking, and certainly this is an area where Fidelity's done a lot of research in the U.S., and I proposed an investment solution that I thought would really resonate with the family, that perhaps would have less risk than just buying early stage venture capital. Two of Fidelity's legendary portfolio managers, Will Danoff, who manages Contra Fund in the U.S., which is the largest mutual fund managed by a single portfolio manager, and Joel Tillinghast, whose investment style resembles Warren Buffett's, a legendary value manager, who's been running his fund they've both been running their funds for north of 30 years now. They noted that over their 3+ decades running their funds, when they invested alongside founders in their businesses, they tended to generate outsized returns. So they wanted to investigate this further, so they commissioned Fidelity to research this. And in the process, what they discovered is that since 1990, returns to shareholders in public companies where the founder is still involved are 3 times higher than in other companies. So the founders are generally customer obsessed, innovative, and highly committed. 3 key attributes of the founder's mentality. And it turns out that the founder's mentality is a huge competitive advantage. And these superior returns were achieved without discerning between good founders and not so good founders. So Fidelity figured that with the depth of our research and access to company management, we should be able to uncover the best founders across a wide range of industries and invest in their businesses as well. So if founder-led businesses outperform the market by an average of, say, 2% annualized, I think it's in that ballpark, and we can apply our research to that already alpha-rich pool, then we should be able to add significant outperformance over and above that. And so we do have a founders fund that will invest in private founder-led businesses up to 10% of the portfolio, but the rest are invested in publicly traded businesses where the founder is still involved in the decision-making process. And this was something that really resonated with the family office executive, who told me this was a story that he could easily communicate to the family for a portion of their portfolio. And it was, I think, for him, I saw his eyes open up when I was talking about this, because in speaking with the family who they themselves exhibit those key characteristics, that founder's mentality, it was something that he knew they would connect with, and that they would want to be a part of.
What's fascinating about this story is that it's entirely relatable. You talked about founder-led companies. We see it daily in our world. I mean, it's tremendous. We have a philosophy at PANGEA that, and it's a curious way to look at it, but it feels differently to us, and we have the data to support it, that when there's closer family involvement, there seems to be a positive correlation between the closer the families involved with running the business and the outcome and the rate of return. So what you're saying there, the data supports that thinking, and I'm encouraged to hear that you have a solution and the resources with some of these incredible asset managers and portfolio managers on your team that have a demonstrated track record to understand deeply what these families are looking for. But not only understand it, you've had the evidence to prove that you actually are delivering results from the thesis. Thank you for sharing that, Alex. In page 11 of the Fidelity study, the 2021 study that we've been referencing in this conversation, what your team at Fidelity found is that the focus on private equity and co-investing for large, sophisticated offices, family offices, is not a new development. And such offices tend to spend the least amount of time on the liquid side of the portfolio and get their exposure in a simple, cost-effective, tax-efficient way. And it appears that what you've just articulated dovetails quite nicely into what your findings are saying. So evidently, from what you're learning through the study, you're building and creating solutions that fit quite nicely to service the family office clients and professionals who serve families who have family offices. And as we keep talking about family, you've already mentioned a number of times this term rising generation and next generation. As we shift gears toward the next generation in our conversation, I wanted to learn from you about how Fidelity is mindfully approaching the intergenerational difference in attitudes towards money and wealth within family offices.
Yeah, that's a good question. I think we touched a little bit on how we're trying to remain, in terms of how we conduct business, how we're trying to remain as flexible as possible to different approaches of the generations, including how we interact with our family offices, what solutions we offer. We're certainly cognizant of the fact that the bulk of the wealth is still in the hands of the baby boomer generation, but that over the next couple of decades, we're going to see the largest intergenerational wealth transfer the world has ever seen. And as such, we're very mindful of the concerns and interests of the next generation, the rising generation. Whether it's how do they want to interact with us digitally, what are their investment priorities as well? How do they think about investing? The generation tends to actually be fairly risk averse, believe it or not, but also at the same time, very interested in certain topics like ESG and climate, interested in innovation, things like the metaverse and cryptocurrencies as well. So we try to be at the forefront of those trends. But I would also say that more broadly speaking, I think it's a really interesting question. And so I actually pulled up a report that was produced by our Fidelity Center for Family Engagement in the U.S. It's a topic that we kind of had thoroughly explored. And I think we have some interesting insights to share with family offices who are trying to create harmony in their families through the generations. I think that's one of the ways that we can help out, is to try to facilitate that those intergenerational relationships. The life cycle is typically money, wealth, estate planning. That's kind of the developmental arena through which all of life passes. And families sometimes experience negative outcomes or future outcomes they didn't realize were brewing. That could be surprises, it could be resentment or anger, strained relationships, or even severed communication and relationships throughout the generations. And I think there are several leading indicators that our Fidelity Center for Family Engagement had identified as a tool for assessing and reflecting on whether their current approach to navigating money, wealth, and estate planning discussions would foster enduring family harmony through the generations. And some of those indicators are dialogue, whether they create a shared meaning, story, creating a shared understanding, collective, so creating shared identity, life events, embracing transitions, and family alignment, so creating shared purpose. So from birth to death, questions and decisions around finances are always there. They're ever present, incremental, and I would argue increasingly complex throughout time. In the early stages, families talk about money. What is it? How do I get it? What does it do for me? Later, the conversations move towards wealth. Are we wealthy? What does it mean to be wealthy? Whose wealth is it? And then estate planning. Whose wealth is it again? Where is the wealth going? Who decides? And I think every life event provides an opportunity to learn and grow together. And the developmental goal is to move beyond the parent-child hierarchies to become peers through essentially a lifetime of open communication. So, that's something in reading that study that really resonated with me on, how we can assist family offices in maintaining harmony through the generations, and how important it is for family offices to focus on fostering that environment with their families.
I hear the message loud and clear. Some time ago, and I've been in this space for decades now, and I interviewed a fellow by the name of Franco Lombardo. He's a dear friend of mine, and he's got over 25 years of experience working with the psychology of money in families. He wrote a book called The Great White Elephant: Why Rich Kids Hate Their Parents. I did an interview with him. It's actually recorded, and everything that you're talking about now, it connects so closely with the experiences and challenges that families have, even when they're having discussions about who will take over the family business, with the presumption that the children will be the heirs and will want to carry on the legacy through the business. And in some cases, it's a really big surprise when one of the children wants to just go off to art school or travel and just not have anything to do with the family business. And there's a ton of wonderful resources, and I'm glad to hear that Fidelity is creating them and has them under the banner, and is doing the research to help families in the family office space navigate those complex, difficult conversations to a soft landing. And I really appreciate you sharing that. Page 13 of your 2021 Fidelity Family Office Investment Study says this. It says, in our experience, and you talked about cryptocurrencies earlier, so this is a lovely segue here. In our experience with family offices, the study says, we are seeing an excited yet cautious approach to learning more about cryptocurrency, and we feel that caution is warranted, but the institutionalization of the asset class is just beginning. The biggest drivers to learning more about the space include potential diversification benefits, deepening understanding of digital assets and blockchain, and the possibility of higher returns. Earlier in our conversation, Alex, you talked about Abigail's decision to dedicate resources and members of the team to finding ways to include cryptocurrencies in retail products and retail solutions. I wondered if that thought has translated into the high net worth, ultra high net worth space with cryptocurrencies, and if it's anything you can share. Once again, I appreciate the sensitivity of the competitive advantage of work that Fidelity is doing, and I wouldn't ever want you to compromise that. But if there's anything you can share that you're working on the ultra high net worth space or high net worth space with cryptocurrencies at Fidelity, we'd love to learn from you.
Yeah, that's a great question. I would say, and this probably is evident from the study, is that although family offices are very interested in learning more about cryptocurrencies and interested in making allocations to their in their portfolios to cryptocurrencies, they're still very hesitant to do so. And I think the volatility that we've seen, certainly in Bitcoin investing, and that we're experiencing right now with the pullback in crypto assets, has certainly left folks trigger shy on making allocations to the space. And I think so far there have not been a lot of investment vehicles to facilitate investing in cryptocurrencies in an easy way. It's always been very complicated buying coins off of exchanges and so on, and that is changing over time. And certainly in Fidelity Canada is also trying to be at the forefront of this democratization of access to cryptocurrencies in Canada, and just make it more accessible to investors here, including investors in the ultra high net worth segment. Right now, what you're seeing typically, and this is, you can correct me if I'm wrong here, but in my conversations with family offices, those that have made allocations or that are contemplating making allocations to digital assets have simply done so through initial exposures to things like Bitcoin and Ethereum. So they haven't invested in overly creative vehicles in the cryptocurrency space, although there's going to be a lot of innovation, I think, in these investment vehicles. One thing that we've tried to do in Canada is that through our partners at Fidelity Clearing Canada, who they do our clearing and custody services, including for many single and multifamily offices across the country where they custody and clear the assets for them. They actually worked for 3 years with the regulators, and last year became the first regulated custodian of cryptocurrencies in Canada, regulated by IROC and the OSC. And so that was a huge, that was really paving the way to have a regulated environment in which to invest in these assets. And as a result, that allowed us to launch an ETF, a physically settled spot Bitcoin ETF that is fully regulated, and also end-to-end completely in-house, where we don't outsource the storage of those cryptocurrencies. We use Fidelity Digital Assets in the US as our sub-custodian, who have been involved in cold storage of cryptocurrencies dating back to 2016, I believe. Abigail Johnson was definitely had early interest in cryptocurrencies, and so we're trying to make them more accessible for investors in the high net worth space as well. And so that's sort of the first part of my answer. I think the second part would be stay tuned, because I'm sure that there's going to be evolution in this area, different ways to invest in digital assets. And in fact, in Canada, Fidelity recently launched a total metaverse ETF as well, which follows the launch of a similar product in the US.
Indeed, we certainly will keep in touch and invite you back at a later date to share more. You asked about my opinion on the cryptocurrency, just to give a bit of contribution. Today alone, I've had 3 conversations about cryptocurrencies, and folks inviting us to participate in cryptocurrency pools. And there's another group out of the entity out of Delaware, but they're in the Midwest in the U.S., and they're looking for approval to become one of the first banks to officially hold and transact in cryptocurrency. So there's a ton of interesting things that are going on, but I'd like to offer a perspective. And I learned some time ago to not give advice, but I just give perspectives now. When we sit around our leadership table and we talk about cryptocurrency, we ask ourselves the question: is the current state of cryptocurrency, does it align with our investment values? If we think about things like preservation of capital, if we think about things like intergenerational continuity, is the current stage of cryptocurrency, does it align? And folks have their own responses on that. And then we ask questions like, well, it doesn't mean that there's not opportunity here. And we dig deeper. We always look for opportunity, because at PANGEA we maintain an opportunistic posture where we see that there's something to be had here in terms of a value exchange. So one of the things that I started thinking about with our team is I looked back at the gold rush, when folks actually went mining, picks and shovels in the ground to pull the gold out of the mines. One of the fascinating things that emerged from my reading is that some of the folks who became very wealthy weren't the folks that were actually in the water panning for gold, but the folks who set up the ancillary services around the mining colonies. And so with that philosophy, that perspective, I started to ask questions like, well, maybe we don't go fully into cryptocurrency. Not that we don't participate. We do have holdings in various cryptocurrencies, but not in enormous positions. We started looking at, well, what are the ancillary services around Bitcoin? And one of the things that we have been directly involved in is Bitcoin mining, carbon neutral Bitcoin mining. And so that was an approach that we started to involve ourselves with. And I hope that story resonates with you, because you could see the thinking, the deeper thinking than just rushing for the gold. We were looking for, how do we preserve capital? How do we invest or participate in ways that align with our values? And that's one of the things we did with regards to cryptocurrencies. And we're always learning daily. Like I said, just 3 conversations alone today on it. And one of our associates in Florida, we have a team out in Florida, and the cryptocurrency event was out there in Florida, in Miami, and he attended, and my gosh, there's an avalanche of conversation going on around cryptocurrencies, and it takes a lot of prudence to really be able to navigate to a safe spot, because it turns out that everyone who's involved in cryptocurrency has a relationship with a family, part of the royal family out of Dubai, and you get to hear consistent conversation. And so I'm so glad that Fidelity is there, and even your team is there to provide guidance, because you have on-the-ground research, and you can help families really filter through all the noise, as it were, to get to solutions that matter. And that's what we do at PANGEA as well, and I'm glad that we're sharing that value. Alex, as we look to wrap up the call, I want to express how deeply grateful I am to you and for you sharing your expertise with us. But before we wrap up, I always ask this question. What is it that you love most about your current role at Fidelity, Alex?
That's a good question, Declan. I've been at Fidelity for 16 years. As I mentioned earlier, in the industry for 20. Both have evolved so much in the last 2 decades, and I would say been really enjoyable to witness and be a part of. In my previous role, I was working with investment advisors in downtown Toronto and have some amazing relationships, long-lasting relationships there. I definitely consider myself more of a people person, and what I'm really enjoying in this role is that I'm able to continue to build great relationships with family office executives and family members this time, but also I would say get involved in some big picture thinking on how we can evolve to build the best possible service model, bring out relevant and innovative solutions to address the diverse needs of the ultra high net worth segment, and really make life easier for family offices. So, to be able to be part of the change, part of the evolution that's happening in the organization, to focus on an area that I think is underserviced and that we certainly didn't have a focus on before. That's been really enjoyable. But at the same time, it's been great just to get on the road again and see people face to face. After 2 years of Zoom meetings from my home, I attended my first conference a couple of weeks ago, the Family Office Summit in downtown Toronto. It was just great to feel that energy of having a group of people in the room all together sharing ideas, and it felt, like a step back towards normal life, and so I'm just really enjoying that aspect of it, particularly at this point, just being able to connect with people face to face again over a meal, over a coffee, or at these different industry events.
No, indeed, I can definitely relate to connecting on a human level with people face to face again. There's nothing like it to create that energy and that bond and that connection. When you're actually hearing someone laugh in person and seeing their eyes light up in conversation, I can definitely relate to that. Alex, as we look to close off this call, I wanted to tell you that you've created tremendous value for not only the members of our team at PANGEA Private Family Offices, but also to the listeners on this particular podcast. I think they're going to really enjoy the insights that you've provided and the encouragement, and the open invitation is what I would describe it, to explore further conversation with the team at Fidelity. I'd welcome you back at any time to discuss developments and innovation that's happening at Fidelity, and thank you again for joining us on PANGEA Talks.
Thank you so much, Declan, for having me. I really appreciated our time together. I've appreciated getting to know you, and thank you for allowing me this forum to talk about all the exciting things I think that we have in the pipeline. And we're actually launching our website, which is going to house a lot of our family office related content shortly. So that'll be available at fidelity.ca/family-office. So hopefully that will be live imminently. But we're really excited to connect with you, and looking forward to continuing to work together.
Indeed. Let's celebrate a successful partnership together. Thank you so much, Alex, and we'll see you again soon.
Thank you. Bye-bye.
Bye-bye now.